Hi, and welcome back to Stop Being Sold. My name is Michelle, and I'm here with Brian. And in this video, we're discussing why only having a 401k can significantly limit your financial growth and security, and why you should be looking at other strategies, especially with everything going on right now, geopolitically and in the economy. So, Brian, I think this is a really important topic because those saving for in a 401k often think that just regularly contributing is all they need to do to secure their financial future.
Sure.
But this isn't always the case, is it?
No, it's not. I would argue your 401k shouldn't be your only retirement plan,
Right.
and you need to diversify if you want to avoid tax risk, single stock risk, liquidity risk, and how about even limited investment options?
It's a lot of risks there. All right, so let's get to this. I want to start with a significant disadvantage of the 401k and a big reason to diversify, and that is penalties on early withdrawals. Now, we're seeing a record number of investors pull from their 401ks right now. So let's cover this one first.
Yeah, I think we're going to see even more people tap in their 401ks in the coming months.
Yeah,
And you're
agreed.
right. This disadvantage of 401k plans can be costly to investors because there's a 10% penalty imposed for any withdrawals made before the age of 59 and a half.
Mhm.
On top of that, the IRS requires automatic withholding of 20% of a 401k early withdrawal for taxes. And the amount withdrawn will be taxed as ordinary income for the year that the money was taken out, which could put you in a higher tax bracket and you'll be forced to pay even more taxes.
Yeah.
So if you plan on to retire early or you need to access your funds for an emergency, you could end up losing up to 30% of your money to early withdrawal penalties.
That's a lot. And it also is sad when
Yeah,
I mean, if you think about how hard you work to save that
to
money and
save
just have 30% evaporate overnight when you need it.
instantly.
All right. So, what do you recommend people do to diversify?
How about consider diversifying your savings into a taxable investment account? And that could provide you with more flexibility for these early withdrawals. With this type of brokerage account, you aren't limited to the amount that you withdraw, and you pay taxes on either short or long term capital gains, which could be lower than your normal income rates.
Okay. Good to know. So, let's move on to the next reason to diversify beyond just the 401k, which is that 401ks limit your investment options.
Yeah, that they do. And your investment options are often restricted to a specific list of mutual funds, which could actually hinder your ability to optimize your portfolio's performance.
Hmm.
This can be a big issue, especially in today's economic climate. You got high inflation and you got heightened geopolitical risk. For example, a limited list of mutual funds might not include assets that are typically used as a hedge against inflation. Also, if your plan only offers funds concentrated in areas heavily impacted by geopolitical risk, your portfolio might be at greater risk.
Sure.
And same thing with bonds. If you're heavily weighted in bonds, you might not have the flexibility to adjust your portfolio in response to the Fed's interest rate hikes.
Yeah.
Adding a self-directed IRA or even a taxable brokerage account to your retirement strategy could allow for a wider range of investment choices, including real estate, private equity, and even precious metals.
And don't forget cryptocurrency like Bitcoin.
Great point. Great point.
All right, so let's move on to the next reason. This is a big concern for a lot of our viewers. I know that from all the comments we get, and that's the uncertainty of future tax rates. Walk us through
Yeah.
this.
Yeah. While your traditional 401k plans offer you the benefit of tax deferred contributions,
Hmm.
they leave you vulnerable to future tax rate
Yes,
increases.
they do.
So, since withdrawals in retirement are taxed as ordinary income, higher future tax rates could eat into your savings faster, which is not what you want to have happen in retirement when you're on a fixed income. The best way to hedge against this potential tax rate increase is to start to diversify within like a Roth 401k or even a Roth IRA because the Roth offers you tax-free withdrawals during retirement.
Love me a Roth.
Love me Roth.
All right, so the fourth reason to diversify beyond your 401k is the impact it has on the 401ks have on Social Security benefits. Explain this.
Yeah, many people are actually unaware that 401k withdrawals can actually affect their Social Security benefits.
Yeah.
So think about this. Once you start taking your required minimum distributions or your RMDs from your 401k starting at age 73, your income could surpass certain IRS thresholds, making a portion of your Social Security benefits taxable.
All right, I had no idea. That's a no clue that that could happen.
Yes.
So, what do you recommend that people do to diversify so they can avoid paying more taxes, especially social taxes on Social Security benefits?
Yeah, yeah. Here's what you want to do. You want to start coordinating your 401k withdrawals with your Social Security claiming strategy.
Okay.
Doing this may help mitigate paying them higher taxes. For example, if you have traditional and Roth 401ks,
Mhm.
you may take your tax-free distributions from the Roth while also taking normal distributions from their traditional 401k. This gives you the income that you need, but
Right.
it can lower your taxable income, which affects your Social Security taxation.
Higher fees is the next reason to reconsider only using a 401k to save.
Yeah, some 401k plans can come with very high administrative and investment fees, which can significantly erode your returns over time.
Mhm.
My tip is to diversify, is to contribute to lower cost investment accounts like index funds inside your brokerage account, which can help keep your overall investment costs down.
Okay, got it. So the last reason we have here to diversify, and this is another big one, RMDs or required minimum distributions.
Yeah, yeah, the good old RMDs. My clients hate taking these.
Well, you from our just comments on our site, it's like they're four-letter words.
It's my money. Why do I got to do this? Why tell me what I got to do? Right. So think about this. With a 401k, you're required to start taking your minimum distributions at age 73, regardless of whether you need the funds or not.
Yeah.
Okay. Well, it may not seem like an issue early on in your savings journey. Trust me when I say RMDs are a huge issue in retirement. You're forced to withdraw each year a specific amount based on your age, whether the market is up or down.
Yeah.
That's the problem. You're then taxed on this amount, whether you needed the funds or not. And then many try to find places to reinvest these funds, which may not even earn as much as their portfolio was earning. So if you prefer to leave your money invested for a longer period, a 401k can be a significant drawback.
Yes, I can. So what's the workaround here?
I recommend diversifying your retirement savings into a combination of these. A Roth IRA, which has no RMDs and earnings are tax free.
Okay.
A taxable brokerage account, which has no limits on your withdrawals, and an emergency fund into high yield savings accounts. This will provide for liquidity needs if an emergency arises while also paying you decent returns today.
Sure. And I think you hit the nail on the head there, the word liquidity.
Liquidity.
Money you can get
Thank
out quick.
you.
All right, we're going to drop a link to a video we did on how 401ks are, well, depending on your situation, an outdated way to save. So make sure to check that out. The link is in the description and the pinned comment below. Also, if you like the content of this video, hit that like button, help us grow this channel, and do not forget to subscribe. Brian and I put out videos on the daily that help you make the best financial decisions for your future.
Yep.
All right, Brian, thank you so much for this. This has been eye-opening, and thanks to everyone who watched.
Thanks, everyone. Have a great day.